India's defense industry is changing faster than most investors realize. And somewhere inside that transformation is a company that started with something as simple as industrial explosives. But today, it is involved in rockets, advanced ammunition, missile propulsion, drones, and next-generation defense systems. That company is Solar Industries India. And here's the part that caught my attention. Solar Industries is sitting on an order book of around 21,000 crore rupees. One single Pinaka rocket order alone is worth approximately 6,084 crore rupees. And its defense business has been growing at an extraordinary pace. But there's a catch. The stock has already delivered more than 54% returns since the beginning of 2026. And at around 18,770 rupees, the company is valued at nearly 1.69 lakh rupees crore. The P/E? Around 101 times. So here's the million rupee question. Are investors looking at India's next major private defense powerhouse? Or are they paying an extremely high price for a story that is already fully priced into the stock? Because when you look beneath the surface, Solar Industries is much more interesting than just another defense stock. The company is moving from explosives into high-value defense products. It's involved in rocket and missile propulsion. It's producing advanced ammunition. It's entering unmanned systems and counter-drone technology. It's expanding its defense exports. And at the same time, it has an ROE of around 32.6%. ROCE of roughly 38%, and a debt-to-equity ratio of only about 0.23. That's a pretty powerful combination. But here's what makes this analysis interesting. A great business does not automatically mean a great investment at any price. And with Solar Industries trading at more than 100 times earnings, expectations are already extremely high. So today, we're going to look past the headlines and break down exactly what's happening inside Solar Industries. We'll look at its defense business, its 21,000 crore rupees order book, the Pinaka opportunity, its financial performance, exports, balance sheet, major risks, and most importantly, whether the company's future growth can actually justify the price investors are paying today. Let's get into it. First, let's understand what Solar Industries actually does. If you only know the company as an explosives manufacturer, you're missing a very important part of the story. Solar Industries has been transforming itself over the years. The company still has its industrial explosives business, but it is increasingly moving toward higher value defense and technology products. And this is where the story gets really interesting. Its defense operations are primarily carried out through its subsidiary, Economic Explosives Limited, or EEL. The company is involved in areas ranging from ammunition and warheads to rocket and missile propulsion systems. Think about the difference. There is a huge gap between simply supplying an industrial explosive and becoming a supplier of sophisticated defense systems. The second requires technology, specialized manufacturing capabilities, extensive testing, certifications, and long-term relationships with defense customers. And Solar Industries has been moving in that direction. One of the biggest areas is rocket propulsion. The company manufactures high-energy composite propellants used in important defense systems, including Pinaka and other missile and rocket programs. And then there's ammunition. Solar Industries has entered areas that were historically dominated by government-owned defense manufacturers. The company has supplied multi-mode hand grenades to the Indian Armed Forces and is also licensed to manufacture 155mm artillery shells. Now think about what that means. India is trying to reduce its dependence on imported defense equipment. That means more procurement is moving toward domestic manufacturers. And companies that already have the technology, manufacturing infrastructure, approvals, and defense relationships could be in a very strong position to capture that spending. But Solar isn't stopping there. Modern warfare is changing. Drones are becoming increasingly important. Loitering munitions are changing battlefield strategies. Counter-drone systems are becoming essential. And autonomous defense technologies are becoming a much bigger part of military planning. Solar Industries has been expanding into these areas as well. The company has a large facility in Nagpur, including infrastructure for testing unmanned defense systems. So when you look at the company today, it's becoming difficult to describe Solar Industries simply as an explosives company. It's becoming a broader defense technology and manufacturing platform. And that's exactly why the financial numbers deserve attention. The defense business has been growing rapidly. According to the figures we're analyzing, defense revenue increased by around 115% year-over-year in Q1 FY26, reaching approximately 418 crore rupees. And later quarterly defense revenue crossed the 500 crore rupees mark. That kind of growth can have a major impact on the company's future business mix. Because as higher value defense products become a larger portion of the business, the company could potentially benefit from better margins and stronger profitability. But the number that really stands out is the order book. Around 21,000 crore rupees. Let that number sink in. 21,000 crore rupees of orders. And within that is a massive Pinaka rocket order worth approximately 6,084 crore rupees. This gives Solar Industries something investors love to see: revenue visibility. Of course, an order book isn't the same as cash in the bank. The company still has to execute those contracts. But if execution remains strong, this provides a substantial pipeline of future business. And there's another part of the story that I think investors shouldn't ignore. Exports. Solar Industries has also secured defense export orders worth around 1,400 crore rupees. That means the opportunity isn't limited to India's defense budget. If Solar can continue building relationships with friendly foreign countries, international defense exports could become another important growth engine. Now let's talk about the company's financial strength. Because this is where the story becomes even more interesting. Solar Industries has an ROCE of around 38%. Its ROE is approximately 32.6%. Those are strong numbers. And its debt-to-equity ratio is only around 0.23. So despite investing heavily in new capabilities and infrastructure, the company isn't carrying an enormous debt burden. That's important. Because defense manufacturing can require significant capital expenditure. If a company has to borrow heavily to fund expansion, interest costs can eventually become a problem. Solar's relatively low leverage gives it more room to invest. But now, let's talk about the elephant in the room. Valuation. Because this is where things can get uncomfortable. Solar Industries is trading at roughly 101 times earnings. That's not a normal valuation. That's a valuation that assumes the company will continue delivering very strong growth for years. And this creates an interesting situation. The business can be excellent. The industry can be excellent. The order book can be excellent. And yet, the stock can still fall. Why? Because the market doesn't only ask whether a company is growing. It asks whether the company is growing fast enough to justify the price investors are paying. At 100 plus times earnings, even a small disappointment can trigger a significant correction. And there are other risks too. Working capital is one of them. Defense contracts can involve long approval processes, testing, inspections, and milestone-based payments. According to the figures we're analyzing, Solar Industries' working capital days increased from around 49.9 to 74.4 days. That means more money can remain tied up in the business. Then there's raw material risk. The company operates in specialized chemicals and high-energy materials. Any disruption in the supply chain or significant increase in input costs could put pressure on margins. And finally, there's execution risk. A 21,000 crore rupees order book sounds incredible. But investors ultimately need to see that order book converted into actual revenue, profit, and cash flow. That's the number that matters. So where does all of this leave us? Solar Industries is one of those companies where the bull case and the valuation risk exist at exactly the same time. The bull case is obvious. India is increasing defense manufacturing. Domestic procurement is becoming more important. Solar is moving into higher value defense products. Its defense revenue is growing rapidly. The company has a massive order book. It's expanding exports. It has strong ROE and ROS. And its balance sheet isn't heavily leveraged. That's a powerful combination. But the bear case is equally important. The stock is expensive. The P/E is above 100. Working capital has increased. Raw material prices can affect margins. And the market is already expecting exceptional execution. So I wouldn't look at Solar Industries and simply say, great defense stock. Buy it. That's too simplistic. The better question is, can Solar Industries grow its earnings fast enough to justify today's valuation? That's what investors need to watch. Over the next few quarters, keep an eye on 4 things. First, defense revenue growth. Second, order book execution. Third, margins and cash flow. And fourth, valuation. Because if earnings continue growing rapidly and the company executes that 21,000 crore rupees order book successfully, the current valuation could become easier to justify over time. But if growth slows down significantly, the same valuation could become a major problem. And that's the fascinating thing about Solar Industries. The company isn't simply betting on India's defense boom. It is trying to move higher and higher up the technology ladder. From explosives, to ammunition, to rocket propulsion, to advanced defense systems, and now into unmanned technologies. If that transformation succeeds, Solar Industries could become a very important private sector defense player. But the stock market is forward-looking. And right now, investors aren't paying for what Solar Industries is today. They're paying for what they believe Solar Industries can become tomorrow. So now I want to know what you think. Is Solar Industries one of India's strongest long-term defense stories? Or has the stock already become too expensive? Would you buy it at current levels, wait for a correction, or stay away? Drop your opinion in the comments. And if you enjoyed this analysis, hit the like button, subscribe to Retail Go Pro, and turn on notifications. Because on this channel, we don't just look at what a company is doing today. We try to understand where the business could be heading next. Thanks for watching, and I'll see you in the next video.